Repo rate unveiled. Your key to cheaper loans. The repo rate is the interest rate at which the Reserve Bank of India, or RBI, lends money to commercial banks. Think of it as the RBI's way of controlling the flow of money in the economy. When the RBI reduces the repo rate, like the recent 25 basis points cut, it becomes cheaper for banks to borrow money. This decrease in borrowing costs for banks usually translates into lower interest rates on loans for us, the consumers. Essentially, the RBI is trying to encourage borrowing and spending to boost economic growth. A lower repo rate is generally good news for borrowers, as it can lead to reduced EMIs on home loans, car loans, and personal loans. However, it can also mean lower interest rates on savings accounts and fixed deposits, impacting those reliant on interest income. EMI relief on the horizon. How repo rate cuts lighten your load. So how does this repo rate cut actually affect your monthly loan payments? Let's break it down. When banks get access to cheaper funds from the RBI, they typically pass on some of these benefits to borrowers by lowering their lending rates. This means if you're currently paying off a loan, especially a substantial one like a home loan, you might soon see a reduction in your monthly installments, or EMIs. Even a small decrease in the interest rate can result in significant savings over the long term, freeing up your disposable income for other financial goals. However, it's essential to remember that the actual impact on your EMI will depend on several factors, including the existing loan amount, the remaining tenure of your loan, and how your bank chooses to adjust its lending rates. Example, the EMI makeover for your home loan. Let's say you have a home loan of 50 lakhs at an interest rate of 8% per annum for 20 years. Your current EMI would be around 40,000 rupees. Now, assuming your bank decides to reduce the interest rate by 0.25% following the repo rate cut, your new interest rate would be 7.75%. This seemingly small reduction in interest rate can result in a lower EMI of approximately 1,500 rupees per month. While that might not seem like much, over the entire loan tenure, this amounts to a saving of over 3.6 lakhs. That's a significant amount that can be redirected towards other financial goals, such as investments, retirement planning, or even just increasing your disposable income for a better quality of life. Section 4. Fixed deposits. Feel the pinch, exploring alternative investment avenues. While a repo rate cut brings cheer to borrowers, it can be a dampener for those relying on fixed deposits for a steady stream of income. As banks adjust their interest rates downwards in response to the RBI's move, the returns on fixed deposits are likely to shrink. This might lead investors to explore alternative investment options that offer potentially higher returns, though often with higher risk. Mutual funds, particularly equity-oriented funds, could be an attractive option for those seeking potentially higher returns over the long term. However, it's crucial to remember that higher returns usually come with higher risk, and it's essential to assess your risk appetite and investment horizon before making any decisions. Section 5. The wider impact. Riding the waves of economic change. The RBI's decision to cut the repo rate is not just about impacting loan EMIs or fixed deposit rates. It's a calculated move to influence the broader economy. By making borrowing cheaper, the RBI aims to encourage businesses to invest, expand, and create more jobs. Simultaneously, lower loan rates can also incentivize consumers to spend more on big-ticket items like homes and cars, further stimulating economic activity. However, this boost in demand can sometimes lead to a rise in inflation, as businesses might increase prices to capitalize on the increased spending power. The RBI constantly monitors these factors and tries to strike a delicate balance between promoting economic growth and keeping inflation in check. Section 6. Your financial game plan. Making savvy moves in a shifting landscape. So what does this repo rate cut mean for your personal finances? Firstly, if you're planning to take a loan, especially a large one like a home loan, now might be a good time to do it and lock in a lower interest rate. Secondly, if you have existing loans, especially those linked to the repo rate, keep an eye out for communication from your bank regarding any changes in your interest rates and EMIs. Thirdly, if you're heavily reliant on fixed deposits, it might be prudent to explore other investment avenues that offer potentially higher returns, keeping your risk appetite in mind. Finally, Stay informed about how banks adjust their interest rates in response to the RBI's move and proactively manage your finances to make the most of the current economic landscape. Remember, knowledge is power, and staying informed is the first step towards making sound financial decisions.